IRIDA rally is over 6%, now 5% on the back of a good quarter. Disbursals rise 73% sequentially, while net interest income also climbs 22% quarter on quarter.
City gas distributor stocks are under pressure after APM gas allocation gets reduced by 18% effective today. The companies say that this change is likely to affect the profitability.
ICICI Prudential climbs 5% despite reporting mixed numbers. The new business premium is up 14%. The annualized premium equivalent misses estimates.
And Gensol is down 5% after the company receives an interim order from SEBI against its promoter and its directors, barring them from the securities market. SEBI will also appoint a forensic auditor to probe the fund misappropriation and misleading disclosures. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as you can see to the top of our screens, we should get that graphic played up for you. Yes, I think it should be up in just a bit. That the Nifty is a little bit lower. But Mangalam, we're not doing so badly. Because if I look at the rest of Asia, well, we have seen that those markets are trading with cuts of around 0.5% to around 1.5%. And the two indices that I have out here, they are in the red. But the important point is the Nifty bank. That's the one that continues to lead the way. So that one is zipping ahead and the breadth of the market as well is positive. So I think that's pretty good news.
It's incredible news, Nigel. You know, a couple of things that really stand out for me. I was looking at the previous, the Nifty's close before Donald Trump announced the tariffs. That time we were close to around 23,325.
Yeah.
The 1 week of volatility went all the way down to sub 22,000 levels, etc. All of that done, we're back to those levels itself. So now it's, you know, in television speak, it is perhaps back to regular programming where we look at the pre-results season lull and now focus on the results itself. So all this volatility is done and dusted. And a bunch of stocks, they are on our radar as well. This morning, we have IndusInd Bank, which was a big mover in yesterday's trading session. The street was expecting something to come by. That something has come by. And now we're seeing a further up move on that stock. So in just the last two trading sessions, the stock is up around 10%. Trent is the other one which has moved to the high point of trade as well. And this despite, you know, reporting their fourth quarter update, which was relatively softer versus the company's own previous growth path. So maybe are the next few quarters looking better? Is the worst in the price or not is the big question. And then you have a bunch of these pharmaceutical names as well, which are picking pace. We have Alembic Pharma, we have, you know, Loris Labs, you have Aurobindo Pharma, all of them at the high point.
Well, you know, Mangalam, another stock that, we had pointed out earlier today that did see a fair bit of delivery-based buying, and it appears it was breaking out, was Havells. You know, as we speak, the stock has moved to the high point of the day. Yesterday, there were some queries with regard to capital allocation because they put close to 600 crores in a solar investment. But from the lows, that stock did see some buying, and now it's at the high point of the day. So that's a stock to note. And also, I present this piece on mid-cap microscope where I educate you about a company. Whirlpool is the company that was at around 2,400. We presented the company, explained it at around that 980 odd rupee mark. For the time being, the stock has been moving well over the last few days. So how much of the bad news was in the price? That's the question. And that stock, in fact, as we speak, is up close to around 2%. But the big story today is the city gas distribution companies. They're trading with losses because the APM gas allocation was cut by around 18%. Sudarshan has been on top of that. He's joining in to revisit that big story. Sudarshan?
So 2 weeks and two negative news flows related to city gas companies. On April 1st, we saw that APM gas price was increased to $6.75 per MMBTU from $6.50 per MMBTU. While that was on expected lines and it was announced as per the recommendations made by Kirit Parikh panel in 2023. But now this APM gas allocation cut has come as a surprise for city gas companies. And in the last 1 year, APM gas allocation has been reduced by almost 50%. In the beginning of 2024, the gas allocation used to be in the range of 70 to 80%. Now, after this cut of 18 to 20%, the gas allocation for city gas companies is reduced to 40%. So MGL says this might have an impact on profitability. Same comment is made by Adani Total and IGL as well. CLSA believes that these companies, especially IGL and MGL, might have to take a price increase that might be less than ₹1 to pass on this cut in APM gas price. While Jefferies believe that it won't be that easy for city gas companies to pass on the APM gas cut. Also, it builds in flat EPS estimates over FY 25-27. But the question is the cut done, or there might be a further APM gas allocation cut we might see in the future?
All right, we take that point, Sudarshan. Thanks a lot for that. Whether the fear of further cut comes by or not, the stocks are all lower in today's trading session. But let's talk about some of the stocks which are buzzing around. We have Irida, which is up nearly 5% after a strong set of fourth quarter numbers. Abhishek joins in to tell us what drove these numbers. Abhishek.
Well, good set of numbers are coming in from IDAF with respect to the Q4 FY25 results. Disbursements are flat on a YY basis, just up 0.5%, but sequentially it's up 73.5% quarter on quarter. So the AM growth is robust at about 27.8% YY and about 10.5% sequentially. They have been able to command better yields this time. So yield has, interest income has grown at about 12% plus on a sequential basis when compared to 10.5% growth with respect to AM. So better yield has actually helped them with respect to spreads also improving for them. NI growth is at 57.3% YOY and about 21.7% sequentially. Provisions are up 24.5% quarter on quarter. PAT growth is robust at 49% growth YOY and about 18% sequentially. Take a look at the spreads. Spreads for FY25 ended at 2.42% when compared to 2.16% in FY24 and about 2.28% in Q3 FY25. Asset quality has also improved for them. Gross NPA ratio has come down to 2.45% when compared to nearly 2.7% in the previous quarter. Back to you.
All right, Abhishek, thanks a lot for that. Meanwhile, we were talking about all these pharmaceutical stocks doing extremely well. Let's get in some source-based information that Timsi is picking up. She says that the pharma industry has moved the Drug Controller General of India, the DGCI as we know it, over the new pharma export norms after facing a hit of nearly $3 billion in immediate exports. Timsi joins in with the details of what their ask is and what the likely outcome of this would be.
Well, in a bid to ensure smooth exports, pharma industry has knocked at the doors of Drug Controller General of India to ease new export guidelines. According to sources, pharma companies indicate that new export norms are hurting about $3 billion worth of immediate annual exports and argue that Drug Controller's new pharma export norms are becoming a roadblock for both existing and future contracts. Just to remind our viewers, the Drug Controller amended export guidelines for pharma products, and as per the new guidelines, pharma companies are supposed to get an okay from regulator of importing country, based on which they will apply seeking for an NOC from the Indian Drug Controller. Only then exports can be made. Sources have further shared that pharma industry is in talks with the Drug Controller seeking relaxation. They claim that not all importing nations have processes or wherewithal to issue regulatory approvals prior to imports. Many nations like Yemen, Ghana, Rwanda have no system to issue national regulatory approval, which is a requirement to seek the Indian regulator's NOC. On the other hand, Drug Controller claims that these new guidelines have been issued keeping in mind that the export processes become simpler and are designed to ensure regulatory oversight. Not just this, Drug Controller is of a view that new pharma export norms align Indian regulations to latest global standards. Also, they ensure domestic safety and responsible export practices. To be seen now is whether the Drug Controller is able to ease these norms, or India, as the industry claims, will have to lose this $3 billion worth of export business, something that we'll have to wait and watch for.
Take that point, MC. Thanks a lot for that. On the other side, Chandan Taparia from Motilal Oswal Financial Services joins in for a quick technical check on the markets. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. The India VIX has spiked to the high point of trade, but this, remember, accounts for not much because it's seen a big cut over the last couple of trading sessions as well. A couple of these banks are doing well. So we have Indian Bank from the broader markets, which has moved higher. Bandhan Bank is the other one, which has also moved higher. And a few of these financials, the likes of Max Financials, etc., are recovering from the lows itself. Good time to welcome Chandan Taparia from Motilal Oswal Financial Services for a quick technical check in the market. Chandan, we were speaking about how the Nifty has reclaimed levels of the pre-tariff, announcement volatility that there was. We were at 23,300 earlier, fell all the way down to 21,745, back to 23,300. So for one who would have taken a leave over the last 10 days, ignored the entire market at 23,300, what should one's call be?
Good morning. Thanks for having me, Mangalam. We have seen a decent recovery from lower levels as index rallied by more than 1,500 points from the lower zone. And the good part is that India VIX, which headed to a higher zone at 23, also fell to 15.5 marks. So decline in volatility with surge in the prices with stability in the global market indicate that market will slow and steady, make the higher base to commence the next leg of rally. The good part is that we witnessed a profit booking decline from 23,850 to 21,750, and that decline was being bought smartly. And that clearly indicates that meaningful declines could be bought and measure a medium-term trend for the index could remain positive to range bound. So I believe any small decline can be bought with support of 23,000, and market has potential to again rally towards 23,750 to 23,850 zone. If I look at the Bank Nifty index, we have seen the clear outperformance here. Bank Nifty managed to hold 52,000 marks, and the levels are gradually shifting higher. It has been making higher lows from last 5-6 trading session and formed a bullish price pattern on the daily chart. So till it holds above 52,000, Bank Nifty has potential to rally towards 53,500 and then attempt towards its lifetime high of even 54,467. So quite positive on both the indices, but Bank Nifty is likely to outperform and can head towards the higher zone.
Okay, all right. Hi, Chandan. Good to see you after a while. So you're sounding both quite positive on both the indices. Give us a couple of your stock calls, and if you have, any kind of view on how Havells is looking on the charts.
Yeah, thanks, Nigel. So after a long time, the setup is giving a sign of bullishness, and the Bank Nifty is giving more positive stance here. So talking about trading idea, which I've selected here, first is buy on Axis Bank. We have seen build-up of long positions. Open interest added by around 10 to 12% in last 4 trading session, and the price is inching upwards. It is holding well above its rising support trend line with hold of 50-day exponential moving averages. So a decisive breakout above 1120 is giving the positive stance. So one can buy with support of 1115 for an upside target towards 1175. And positive stance in Axis Bank can also take the Bank Nifty to higher zone. Second trading idea, there is buy on UPL. The stock is all set for a small follow-up and then fresh breakout in the momentum. It is at the words of 7 weeks low consolidation breakout. So with support of 645, here we can see a smart rally towards 690. Last trading idea, there is buy on SDFC Life. Positive price action after a long time, which clearly indicates that momentum could be seen here. In fact, this sector started to attack buying interest. We have seen a rounding formation and rising support trend line can take it to higher zone. So with support of 700, one can look for an upside target towards 750. Now on reply to Havells, we have seen a decent run up in last 4 days. It rallied well from 1390 to 1600 marks. Multiple rounding bottoms are visible on the daily scale with a decisive breakout of 40 trading session. It surpasses falling supply trend line. In fact, if I look at the data setup, the longs are added with coal unwinding, which also indicate the positive strength. So I believe momentum could continue with support of 1560. Havells has potential to rally towards 1680 to 1700 zone.
All right, Chandan, thanks a lot for that. So those are a couple of stocks on his radar, Havells as well as Axis Bank, along with another one. Just keep an eye on a couple of these names from the hospitality space. So we have Sami Hotels, which is up around 5%. Giving it company at the day's high is Juniper Hotels, and we have Park Hotels as well. Remember, Indian Hotels was a big mover in yesterday's trading session, up nearly 6.5%. And now we have all the other hospitality stocks as well moving higher, perhaps ahead of the summer vacations. And, a lot of people perhaps looking at the prices in hotel stocks as an entry point for these counters, which had seen a correction from the highs itself. Take a short break. Before we do that, get you an idea for profit coming in from our colleagues at Money Control Pro. Today we have Nitin Agarwal joining in.
The company that I have chosen for today is FIAM Industries. Amid heightened market volatility driven by uncertainty surrounding US President Donald Trump's tariff policies, we are strategically focusing on opportunities within the Indian market, and FIAM Industries is one such company which has focused more on the domestic market and is immune to the tariff war. There are a couple of factors that make us upbeat about the company. First, the foray into passenger vehicle. The company has achieved a milestone by supplying its product to the Mercedes-Benz and has secured order from multiple OEMs for multiple products. Further, the two-wheeler segment continues to be very strong. It registered a growth of around 10% the first 9 months of FY25 as compared to the same 9 months last year. In fact, the FEM industry outperformed the industry growth and registered a growth of around 22%, driven by increase in content per vehicle. Thirdly, the company continues to capture the opportunities provided by the Sunrise electric vehicle segment, and companies partner with who's who of the electric vehicle manufacturers. In addition to that, company has a very strong, robust order book, and it is being partnered with for supplying the new products from the Yamaha and Royal Enfield, which are registering a strong growth. Lastly, in terms of valuation, the company currently trades at around 15.2 times FY27 projected earnings, which we believe is very reasonable for a company like this.
Speaking about the travel and hospitality theme, just pull up the intraday chart of Ixigo, La Travenues Tech, as it is listed on the Bombay Stock Exchange. Just 3 minutes ago, that stock was absolutely flat, and now it's moved to the high point of trade with a gain of almost 4.5%. So means, there is some secular buying that is taking place in the travel and hospitality space itself. La Travenues Tech, that is the stock which is up for you on the screen. But speaking about, travel, hospitality, consumer discretionary expenditure, it is online fashion and beauty player Nykaa, which is shifting its focus to go beyond just the online realm. While it has some offline presence already, are they looking to increase it or not? Well, we get the answers of all of that from Shilpa, who spoke with the company's CEO and head of owned brands, Adwaita Nair, spoke about their offline expansion strategy.
So, across this whole own brands portfolio of about 1,000 crores of NSV, 50% of that comes from our online Nykaa.com portal, but 50% is from other places. It's from our stores, it's from GT, it's from MT, it's from offline, points of sale and so forth. So yeah, offline is important for us. I think today it's probably about 20-25% of the overall turnover, with about 10 to 12,000 points of sale across GT and MT.
Right.
But we will keep focusing on that. I think the thing with offline is you have to be careful about how you expand. You can get growth quickly, but I think it's more about being thoughtful and picking some really high quality points of sale. And having sort of measured but high quality offline growth, which is what we're after.
Right. And, can you give me a sense of then, as a vertical of the house and brands, right? What is the growth roadmap that we're looking at, and which of these brands do you see as leading the growth for you going forward?
I think we consider this a very, very high potential, high growth part of our business. It's growing incredibly fast, and faster than some of the other businesses in our portfolio. So we will continue to double down. All these 3-4 brands that I've been talking about today can easily aim for 1,000 crore, turnover in the near future.
Right.
But I think what's on my mind is, there are probably 6 or 7 brands today that we're focusing on. But are there any other exciting spaces that we need to be looking at? And making sure that we're adding to the portfolio at the right time is a big priority for me.
So you're saying that you are open to bringing in more brands or acquiring more brands, or will you look at organically launching one?
I think we like building in-house as well as we like acquiring. I think even within the portfolio that you see today, there are enough brands that we built internally. Nykaa Cosmetics, Wanderlust, K-Beauty to some extent is a JV, but we've been doing it internally. And then there's some that have been very successful as acquisitions, whether it's Dot & Key or Earth Rhythm. So I'm open to both models.
What are these white spaces that you're probably looking at that you see very good opportunities?
I think a new emerging category that I'm loving right now is bath and body and fragrance. We're seeing a lot of positive movements in both those spaces on the platform itself. So I think India is sort of awakening to this fragrance movement, and I think we'd like to have a play there as well. As of now, we're going to build those two. Wanderlust will be our bath and body brand, and we've gotten really focused on it. Really excited about the place that plays in.
How big is it?
Wanderlust will probably be touching about 100 crores or so.
Okay.
But yeah, immense potential. Not scratch the surface outside the Nykaa ecosystem at all.
Right.
And then we're building a bunch of perfumes under a brand called Nykaa Perfumery.
Yeah.
So I think that's still very nascent, but I think in this year, fragrance will be a big focus for us.
In the previous earnings calls, you'd spoken about a sort of consolidation that you're doing with these brands in the fashion business, and the focus there also, right? Because fashion otherwise being a newer business, the growth engine has been a little slower, and usually investors show a lot more concern towards the fashion business. So just can you run us through what these consolidation efforts are on the fashion business, and how does one look at the growth trajectory of the fashion business? Because last quarter also, though it was the wedding season and all of that, the growth was largely flat.
Yeah. No, I think, look, we are incredibly excited about our fashion business. As a Q3, it's an annualized GMV of about 4,000 crores. That is not small by any measure. And widely, it's widely established through multiple customer surveys that NykaaFashion.com is the second to third most popular e-com platform today in India. And I think all of that 4,000 crore top line with so much customer love and preference has been built in a matter of 4 to 5 years. So we feel very good about that space. We're not worried about quarter-to-quarter growth and numbers. We're in here to play in fashion for the long run. And I think fashion as an industry in India is so exciting, and it's so large, and it's growing incredibly well. And I think if you just take a 10-year view, it's really important for Nykaa to have a foot in the door. And I think we're building a very unique proposition with our multi-brand platform there.
Interesting chat there. Well, for the time being, we'll have a wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.